Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Today we're going to talk about something that is so underutilized that could dramatically change your trading around in a heartbeat. And specifically if you're swing trading, if you're not somebody who's a day trader who's scalping or a futures trader who's looking to get in, get out, and go to the next trade, which I think most people are not. I think most people would rather put on a position and then watch it for the next few hours, move in their favor, or watch it for the next 5 days, 10 days, move in their favor. I know that's what I like to do. I get all the gray hair I need. I don't need to be in and out, in and out, in and out, and drive myself crazy. There was a time and place for that, but I think as computers get more sophisticated and a lot more trading is being done by algorithms, we need a way that we don't need to be perfect. It's interesting that we see a lot of people in the boot camp looking for that exact entry. Tell me exactly where to get in. Tell me exactly where to get out. Today we're going to focus on exactly how to get in. It's a big difference between the precise price versus what I talk about all the time, which is working in order. And specifically, we have a lot of people who are in the community that are trading stocks like Tesla and Apple, and some of these stocks are $500 stocks, $1,000 stocks, and more. Even going all the way down to, let's say, a $50 stock. You can apply what I'm about to teach you even on a $50 stock. Which, by the way, if you're struggling with making money, but you absolutely feel like you know what you're doing, there's something missing. Like there's one little piece missing that you don't get. That's why you need to invest in the boot camp. That means you're literally telling yourself that there's a gap between where you are and where you want to be. Click down, see how other people in the boot camp are doing, and it's such a small investment for the next 30 days. I strongly recommend, if you feel like there's another level that you're not at, definitely click down and look to see what the boot camp's all about. And I hope to see you on the other side. So what we're going to talk about today is actually how to work in order. I actually spend a lot of time in the boot camp discussing work in order, work in order, work in order. And I mostly bring it up in conditions where the market's tougher, where I'm tape reading and I'm seeing that, yeah, it's definitely a buying opportunity, but it's not perfect at this moment. So I say work the order, or I say work your stop losses if trades happen to be moving out, where I'll say scale out or get out. But in this case, we're going to talk about scaling into positions and the right way to do it. What's kind of interesting is that the forces that move the market, the hedge funds, the banks, the large institutions that have the million, 5 million, 10 million share buy orders that make a stock go from here to here, they're not going to the bid and they're not advertising, hey, I need to buy 5 million shares. I'm just going to sit here until I get them, or I'm going to go all in on one entry and I hope it's perfect. It doesn't work that way for smart money. And you want to start to be the smart money. So you want to start to work your orders in a way where you want to take the pressure off of, you need that exact spot. And if it doesn't hit that exact spot and moves a little bit against you, you're going to get stopped out and you're like, I put the trade on, I got stopped out by a penny, and then it did exactly what I wanted it to do. And there's no reason to put yourself through that torture. That's self-inflicted torture. That's an error in knowledge, really. So when we talk about, especially in the community, we talk about our entry signals, and I don't want to get into them here. I want to keep those behind the scenes for the people in the community. We call out the signal, and then it's your job to know how many shares you want in total based on how much you're willing to risk. And then it's your job to build that position in the context of where it stopped at that moment. It's kind of funny if you really think about it. We think about we want 1,000 shares, and for some reason we're untrained, I guess is the best way to put it, to say go get 1,000 shares and then have your stop loss from that number. Big traders, 7-figure traders, 10-figure traders, even high 6-figure traders don't do that. You don't go in with, I want a 5,000 share lot and go in and get 5,000. You put probes out there. And ironically, I've started to go back and read some of my old trading books. And I guess stuff that I might take for granted is not widely known, or somebody hasn't taken their trading deep enough. And we all kind of, obviously, if you've heard Reminiscences of a Stock Operator, you've read about Jesse Livermore. This is a book that's more biography. It only has a brief mention of reminiscences. But what's interesting is the constant discussion in his lessons about what he called sending out probes. he would test the market. And the way I talk about it in the community is I say, I want feedback before I size up. There's no other way to put it. And if you're right on most of your trades, which the community is doing an amazing job at finding good ideas right now, the following order flow, reading the tape. If you're right on most of your trades, but you're not making money, it probably means that you're trading too much size or your timing is off. So let's assume that you're in the community, you're in the boot camp, and you understand how we time into entries. Now you have to, before the trade, understand, is this an A-plus trade where I can go in a little bit heavier? Is it a breakout trade? Or even more interesting, is it a trade that's starting up here where, let's say you went up and now you're pulling back and you want to buy this pullback before it takes off again? There's a process to buy that pullback to get to the total number you want and then have a stop loss versus going in on that exact spot. Now, when we talk about our entry signals in the boot camp, we're looking for that to be our initial entry, and then as it moves in our favor, and then as it moves in our favor. It's not an all-in type of deal. And I think that just needs to be brought out, that I do it in my own trading where I'm like, put the feeler out, put out the probe, put out the probe, put out the probe. In my mind, again, it's the feedback. I want the market to tell me when it's safe. And if you think about that, that's such a different way of trading, which is also why I hate paper trading. You want to get in there with 100 shares. You want to get in there with 50 shares. You want to get in there with something so your heart is pumping a little bit. It's moving in your favor. And okay, now the market's giving you feedback. Dip your toes in the water a little deeper. Put on another 100 shares or whatever the share size is. Get feedback, because the market does it in both directions. You put out your probe, and if it moves against you, you scale out, you get out, and you look for another entry. We're practically trading in zero commission world right now. So as it moves in your favor, you start to build that position. Now, I can hear the question is, if I'm looking at that initial entry and we have the stop loss right there, what do I do? Well, you take the stop loss. There's really no other way to put it. You have to understand where you're planning to get out of the position. It is zero commission. When I first started trading, it was $250 round turn. Now you're practically getting paid to place trades. There's no reason to hold a trade against you. If you are at your screen trading or have stop orders in the market to get in or get out at certain prices, there's no reason to hold the losing trade, but you need to know what that losing trade is. So we're going to talk about working in order within a window and actually how to do that if it's a breakout moving in your favor for continuation versus the stock is pulling back, it's super strong pulling back, and now you're looking to build a position in the direction that it's going. So we're actually going to head over, got to put up my other screen. We're going to head over to the charts and we're going to take a look at, and not the charts, we're actually going to go into a presentation. So if you're in the community and I can hear the questions in your mind, you're like, well, we have that entry signal, we see the stop loss, what am I supposed to do? That's a part of your trading. So what I'm discussing right now could loosen up a little bit. It was shocking to me really is getting out at the exact penny. Like it went down and it took me out by a penny. You shouldn't be getting taken out by a penny. At some point you have to use your judgment. At some point you have to say, I want 1,000 shares. I'm going to start out with 300. And if it goes down by a penny, I'm not going to get out of that trade because I don't have my full share size yet. So we're going to show and we're going to discuss that right now very briefly and walk through the share size management. So there's two types of share size techniques, but 3 entry conditions. That's the big part here, right? So first we have continuation patterns that are entered in the direction of the most recent momentum. So we can imagine a stock pushed higher, pulled back. So now we're looking to initiate a trade in that direction or a breakout entry. So either way, we're looking to enter after it pulls back and starts moving in our direction, or it's sideways and moving in our direction. So this one here, the share size technique is it's moving in our direction, okay? So share size in this case should always be the largest amount first, adding additional shares in fewer increments as it moves in your favor. So this is traditional pyramiding. You start out with this number, and as you move higher and it moves in your favor. So if you're in the community, whatever that first entry signal is, and I want to keep that a secret with us in the community, that would be your first probe. That would be your first order where you're looking to get feedback from the market, but it's not your full share size. That's the point I want to get across. And this allows you to relax a little bit on the entry. So in this case here, if you want 1,000 shares, your first entry on whatever we call out in the room as our initial entry, it would be this. Out of 1,000, you start out with a smaller amount. Then 300 as it pushes and pauses, then 200 as it pushes and pauses. As it moves in your favor, it's a lower share amount. And the reason you do that is you don't want to be top heavy where if the stock pulls back on you, now you have the most shares at the worst price, and you end up turning a good trade into break even. So if you have the most shares at the lower level, no matter what, when it pulls back, the worst thing, maybe it'll be a break even if it doesn't follow through. So that's if it's moving in your favor. Now, if you're building a position into support or short selling it to resistance, so imagine a stock breaks out and you don't want to wait for it to pull back and start moving in your favor. You're so confident in this stock that as it's pulling back, you see a definite support level or whatever number, maybe a moving average, whatever the number is, starts to pull back, and you're like, okay, I want to start buying on the way down, building my position. And actually, one of our people in our community, Jerry, did this this week actually, in a trade in Apple, where he worked the order, finally bottomed out, turned around. Everybody in the community is like, I don't understand. How did you hold it in that big pullback? And Jerry explained, I worked the order. I wasn't in there for 1,000 and then I got another 1,000, I got another 1,000. He was working the order. So this is how you work the order. You actually, as it's pulling back against you, you start out with the smallest amount. And imagine you're working it, let's say DocuSign or any one of those stocks that we trade frequently in the community, OSTK. A lot of people getting shaken out of good trades in OSTK. You'd be working the order within a window. So it might be within $1. It could be within a $5 window, but you're not going in all in on one trade. Might be a little hard to do if you don't have a larger account, but that's just a part of trading. That's just reality. There's no way of getting around it. But, you know, Robinhood and all these other things, you can trade 5 shares now. Learn how to do it with smaller amounts. So as the stock is pulling back and you see within that window, maybe it's pulling back into yesterday's low as support. Maybe it's pulling into yesterday's high as support. The stock gapped up and pulled back. And you're like, that's the level I think that it's going to stop, but we're $1 away. So I'm going to start out with 200 shares here. Pulls back a little bit more. I'm going to add a little bit more. Pulls back. Now you're building a share amount that you're accepting risk on. Then you're going to have your stop loss on that total amount. And then if it turns around, you'll have the most shares at the best price, which is the lowest price in this case, where you expected support to come in. So this is a really interesting topic. And I was thinking hard about how I can explain it without making it sound like I'm contradicting anything, because, you know, there's the entry. But the entry is a pause for you to start working your positions. And I say it every day, work the order, work the order, work the order. This is what work the order means, both in your favor and against you. So you're working the order to build the position. You're working the order to scale out or trail a stop as it moves in your favor. You're working the order as it moves against you. You're scaling out or getting out. And here's actually another interesting one. Let's say you work the order and you got your position, but now it spikes further against you. And let's say now you got 1,000 shares. Spikes against you, take off 700. You're like, I didn't expect that. Why would I hold this? It's not working. Don't buy more of what's not working. But here's the thing, as soon as you get out, but you still have some of that position, set an alert immediately at the original price you got in, because if it gets back up there, the trade reestablishes itself and starts to take off again, put the trade back on. Raise your hand if there's 1,000 times you feel like you got stopped out of a trade and then you watched it go up for the next 5 hours or 5 days. It's happened to everybody. It's your job to get back into that trade. Trading specifically, it's called active trading. It's not passive trading where you're going to sip tea, play 18 holes if you're an active trader, especially a day trader. And even if you're swing trading, you need to know what you plan to do before you need to do it. I talk about it in the boot camp. We talked about it in a few recent videos. If this happens, I'm going to do this. If this happens, I'm going to do this. What do I need to see? What don't I want to see? What do I need to see? What don't I want to see? When you start to think like this, which is not some advanced thing, you just need to be prepared. You're just saying, what am I going to do no matter what? Once you start to do that, trading actually becomes a lot less stressful. That's what I want to see. I'm going to stay. Or that's not what I want to see. Now I know what I need to do. It's that simple. The hard work is finding good ideas, and that's what the boot camp's about too. We're calling out amazing ideas right now. So I really feel that this particular topic will eliminate a lot of the stress from the questions that I get about show me the exact place to get in. So we have that entry signal. Consider that your first piece, and you could absolutely have your stop loss right there. But just put a little bit of judgment in. And again, I used stop and go traffic. Put a little bit of judgment in. If it takes out your stop loss by 3 cents, by a penny, by 5 cents, ask yourself, has the circumstance really changed? You're not getting conviction for the trade on the entry. You're getting conviction because you built a great argument way before the entry. So hopefully working these orders and having at least a concept in your mind dramatically changes and removes stress from finding that exact spot and getting worried or scared. You're never going to be scared again because you're 100% in control. It doesn't matter what happens. Now you're either adding or reducing shares and working the order in the direction of your trade or against it. And that's all on you, which makes it a lot easier to trade. All day long, I'm putting on shares, taking them off, putting them on, taking them off. Finally works. And then you hold it. And the next part is really being disciplined in holding trades. Again, getting back to Jesse Livermore, he said the hardest part of trading is sitting and waiting for good ideas and sitting on the good ones and letting them go, not taking quick profits. Hope this video helped. If you have any questions, absolutely click down and subscribe. This was a valuable video. It wasn't charting or anything like that, but this takes all the pressure off of trading. It makes it a lot easier, quite honestly. Have a great day, and I hope to see you in the boot camp.